Crypto is going through a turning point right now in the market, and there have been several factors that are involved in this, and several more in the near future that we need to look out for. Let's talk about it. How's it going, everyone? My name is Jake with Trade Confident. Today, I'm going to be talking to you about what happened yesterday with FTX, what caused the crash, and what we're looking at in the future for that. On top of this, we have the CPI report coming out tomorrow, which is going to tell us how inflation is doing compared to last month, and I'll be explaining what we can expect based on the possible results. After that, I'll be doing a Bitcoin analysis showing worst case scenarios. Travis already did a video with this, calling Bitcoin out to $9,700 in the worst case scenario. I agree with his analysis, and I'll be giving some more points to reinforce this. Now, before I get into any of this, it's very important to remember that this is an ever-evolving situation. Crypto has seen multiple major platforms go down recently, including Voyager and Celsius, but has never seen anything quite like this on this scale. But I don't think this is going to be a crypto killer. I don't think the main market cap is going to zero. With that, I'm going to start with explaining what actually happened yesterday. Sam Bankman-Fried released this tweet yesterday. Hey all, I have a few announcements to make. Things have come full circle, and FTX.com's first and last investors are the same. We have come to an agreement on a strategic transaction with Binance for FTX, pending due diligence, etc. Our teams are working on clearing out the withdrawal backlog as is. This will clear out liquidity crunches. All assets will be covered one-to-one. This is one of the main reasons we've asked Binance to come in. It may take a bit to settle, etc., and we apologize for that. But the important thing is that customers are protected. This is the tweet from the Binance CEO about the same situation. This afternoon, FTX asked for our help. There's a significant liquidity crunch. To protect users, we signed a non-binding letter of intent intending to fully acquire FTX.com and help cover the liquidity crunch. We will be conducting a full due diligence in the coming days. In short, FTX had a liquidity crunch very similar to what happened to Celsius earlier this year, when Celsius had halted withdrawals on its platform simply because it did not have the reserves to back up the amount of withdrawals that were taking place at the time. Pretty quickly after that, Celsius declared bankruptcy and is basically no more at this point. Now this is happening to the fourth largest crypto exchange in the space. However, if the exchange went down and went the way of Luna and Celsius and Voyager, this would have been really bad for the market. It would have been a much larger scale than those three instances. Because of this, Binance has shown intent to acquire FTX and allow its users to withdraw the amounts that they originally intended to, therefore basically saving the crypto market. But that's not to say that the market didn't react severely to this situation. Since the announcement yesterday, Bitcoin has fallen a solid 18 to 20% here. In this drop, Bitcoin has found a new bottom for this bear market, and it is trading below $17,000 right now, currently at the price of $16,750. Here's where the liquidity lockup behind FTX actually happened and why this crash happened in the first place. Along with FTX, Sam Bankman-Fried is the CEO of Alameda Research. Alameda Research is meant as more of a trading group to FTX's exchange, and really where Sam Bankman-Fried gets a lot of his money. Overall, Alameda Research has $14.6 billion worth of assets on its balance sheet. Of the $14.6 billion balance sheet, its single biggest asset is $3.66 billion worth of unlocked FTT, and its third largest entry is $2.16 billion of FTT collateral. These are locked tokens. This comes out to $5.82 billion, or about 40% of Alameda Research's total balance sheet. This means that 40% of Sam Bankman-Fried's Alameda Research was made up of a coin that Sam Bankman-Fried had created himself. This coin has no real intrinsic value or utility besides creating liquidity on the FTX exchange. Essentially, that means that almost 40% of Alameda Research's net worth was printed out of thin air using the FTT token. I have to say, while it's not exactly the same situation, it feels eerily similar to what happened to Terra Luna, where they were telling people, oh, it's worth this, but just ended up not being worth that much. As soon as consumers found out about this, they started withdrawing as fast as possible, including huge whales, and they couldn't keep up with withdrawals as soon as that was proven. As this happened, the price of FTT dropped, so far falling as far as 87%. Due to the fact that 40% of their net worth was in this token, this means a huge portion of their net worth just dropped 87%. And with the value of withdrawals trying to come up, they simply could not keep up with that, especially with the major crash in its price. On top of this, there is another reason for Bitcoin crashing on its own, and that is because of the midterm elections. I'll link the video down below to explain why. but essentially the last two midterm elections that Bitcoin was a part of saw a 50% drop over 2 months. While the situation with FTX is independent of the midterm elections do tend to put bearish pressure on the general market, so we are likely to see huge moves down in the next few months. Now, the third and final point I'm going to bring up today is the CPI report that is being released tomorrow, Thursday, November 10th. This report will tell us exactly where inflation is at, and it'll give us insight on what we should be expecting from the interest rate hikes moving forward from the Feds. I'm not too worried about it though at the moment. According to analysts reporting to FactSet, the U.S. Labor Department's Consumer Price Index rose an estimated 8% on a year-over-year basis in October, down from the 8.2% reported in September. Core CPI, which excludes food and energy prices, is forecast to be 5.5% against the 0.6% last month. This is generally good and shows that inflation may actually be decreasing month over month. If this is the case, then the Fed is likely to start that Fed pivot that we've all been hoping for. What this will essentially mean is they're going to slow down their interest rate hikes. Hopefully the one in December will be about 50 basis points instead of the 75 basis points that we've seen multiple times in a row now. If this happens, this will mean that the Feds are seeing a slowdown in the market. It means that we may be on track for this bear market to end, which we really all are desperately hoping for. However, a counterpoint to this is that if it is higher than expected, which it has been recently in recent CPI reports, it could mean that the Feds will continue with their 75 basis point interest rate hikes, which I do not believe is priced into the market, and we could see a drop because of that. Right now, I'm looking at Bitcoin USD on the 1-day time frame here. I've mocked up in the white vertical lines here where previous CPI reports have come out. I haven't found any significant correlation to the market moving one way or the other, but it does seem like moves down happen more often than moves up after these CPI reports have come down. You can see right here, this went down, this went down, this one went crazy down, but I do believe this was independent of the CPI report. It went down here, here, and a very little bit here, but it is important to note that the market did actually move up after the report in July and the report in April. This means that 75% of the CPI reports resulted in a move down, but there is still that 25%, that 1/4 chance that we could see a move up. But mostly it depends on what the CPI report actually tells us. If it shows higher than that 8% month over month inflation and higher than the 0.5% core inflation, I think we will actually see moves down, but the economists are not expecting higher than that. Either way, we will keep everyone updated. Just to give a general outlook on the rest of the market and where we could be going next, independent of fundamentals, I'm looking at Bitcoin USD, the TC top and bottom finder on the Trade Confident website. You can get access to these metrics and more at the links in the description. Right now, we are seeing Bitcoin has fallen outside of the green support level here. We are solidly below the blue midline, and we are likely to see a downtrend continue from here, in my personal opinion. The market reversal chart is printing a green bar right here, showing that we could be seeing a buy signal right now. It will be really important to pay attention to this, but as buy signals come out, we will need to look harder into technical and fundamental analysis before making trade decisions. Checking the 4-hour time frame here, I'm using the TC top and bottom finder, trend exhaustion and price versus whale money flow indicators. Links for these indicators can be found in the description, and they are helping make our members tons and tons of money. The TC top and bottom finder did put a strong sell signal before this move down. We did get a buy signal, and at the time that probably would have been a good call, but fundamentals came in and absolutely crashed the market here. It's important to be clear that this strong sell and this buy signal were completely independent of any fundamentals. No technical analysis indicator can predict fundamental crashes like what happened here, and it's very important to note that. Where we can use indicators and technical analysis, though, is to predict where the market will actually bottom out. You can see right here, the price has fallen outside of a green liquidity pool. These green pools right here mean there is a lot of long trades happening. Despite this, the market is still dropping. As of right now, there is more selling pressure in the market. Trend exhaustion has completely bottomed out. Price versus whale money flow is extremely low. In fact, the lowest we've seen in a very long time. This means that whales have pretty much gone out of the market completely, and we should be expecting moves up decently soon, but I don't think it's going to be enough for the market to recover back to where it was. I don't think we're going to be able to reclaim 19,000 anytime soon. As of right now, we've hit a new market bottom at $16,500. And overall, I don't see any signs of this really stopping. I'm not feeling very bullish right now. I think we could see some recovery back to 18,250, but that is next structure resistance. I think 19,000 at the absolute most, but it'll be very difficult to reclaim this anytime soon, especially with the generally bearish pressure in the market. Some analysts are also thinking that we are going to see a full-on recession in 2023, and if that does happen, that's just going to push Bitcoin down farther. Travis did say we could see as far down as 9,750. This was based on a significant amount of liquidity at this point. There's tons and tons of long trades. It is the longest bar, and it does span between $10,000 and $9,000, but at 9,700 is where the largest bar of long liquidity is. However, we do have structure supports before that happens, a big one at 15,750 and two major ones at 12,750 and $12,000. I think $12,000 will be a huge psychological level. Just to give a general prediction, I think that $9,500 to $12,000 level is the range that we should be looking at for a market bottom. Of course, this is not financial advice. This is just my personal opinion, but we will be keeping everyone updated as the market continues. Now, if you want to get access to the indicators you saw me use in this video, I'm going to show you how to get the best deal possible. First, you're going to want to snag the bundle pack. The bundle pack comes with 9 of trade confidence indicators, including the price versus well money flow and trend exhaustion indicators you saw me use in this video. On top of this, it will include a $400 off coupon for the TC top and bottom finder and TC market reversal indicators, with the price of all indicators using the discount code coming out to less than the price of just these two alone. No matter what you purchase, you get lifetime access for a one-time payment and full dedicated email support. Crypto is looking to be in a very tough situation right now. Overall, though, I do think crypto will recover at some point. I don't think that this is going to be the death of crypto. But for now, we will be doing our best to keep you updated. So be sure to like and subscribe for more crypto content, education, and analysis. Remember, trade safe, trade confident, and I'll see you in the next video.